Hello, how to file Form 1120S S-Corp tax return. I would suggest you use a software to file your S-Corp tax return. Before you do that, you can pull the Form 1120S and save it and use it to do a draft of your returns. That way you have an idea what to expect. So you pretty much download the form, the instructions. You download the instruction as well to save it, and schedule K1 Form 1120S schedule K1. You download that as well, because that's what will be sent to the partner. So the software you are going to use is going to fill out all those forms for you. That's why it's important you use a software to file your return, because it's going to move those. We can just close it. It's going to move the data that you are putting in. When it asks you a question and you answer it, it's going to move those information, financial data, to the right forms that you need to put them in. That way you enter those data once, but the software is going to save you time by duplicating it and putting it in the right form, from IRS forms to the state forms that you need to file as well for your business. So we are going to use Form 1120S just to draft the return and have an idea what to expect. So when you look at Form 1120S, and first, Form 1120S is filed for S-Corp by S-Corp S corporations and L.L.C that elected to be taxed as an S-Corp. So you'll go to S election. So when you elected to be taxed as an S-Corp, you'll add the date. You'll add your business name, your business address, city, and state. So you'll add the business code, and if you it's not the first time filing a business, your business tax return, you should have that code already in file. If that's your first time, you should be able to find the code at the end of the instructions, and you can read through the code to see which one best describe your business. So if you are an online business, you do not have a brick and mortar. In fact, they changed those, and they will have instructions somewhere here as well, but you can scroll down, and I think even as a business owner that operate online, you will choose a business number here that is related to that business, whether it is a brick and mortar or online. But we can scroll down. So you have retail here. So if you are a retailer, you sell to the direct users of your products, you'll be under retail. So you can scroll through it. And non-store retailer. So non-store retailer sell all type of merchandise using such method as internet. So they have it. So those type of retailers should select the the number associated with the primary line of products sold. So you'll just scroll through it to see what your product is, what do you sell, what is your primary product line, and you choose the right number there to put on your form. And here you'll put your business EIN number and the dates you assign with your state to create your business, whether it is an LLC that later elected to be taxed as an S corp or as an S corp straight. So, and your total assets. So we are going to quickly, we are not going to fill up the top file, but and again, if you are doing the draft version, you are going to use the software. You can choose to put those on your draft. That way, when you start using the software, you can use the draft to pull those information and put it in the software if you do not want to go back and look in your files. But those information you will need to file your form. Therefore, if you are going to use the software, you'll want to have those information, those data that I'm talking about on hand, so that when you start filing, you don't pause to go look in your files looking for an information, but you know that you will need your election dates, your date of incorporation, your business activity code number, and you'll need your assets. Therefore, you need your balance sheet. So for sure, you will need your balance sheet. You will need, if you have physical product and you carry inventory, you need your inventory documents. If you have payroll, you need your payroll documents, and so forth. So we'll talk about those documents you need as we go along. So total assets. So total assets, you'll find that on your balance sheet. So I have some document open here, and we can go to balance sheets. And I'm not going to go too much in how you are going to create your balance sheet, but pretty much the way it works is you pull your 2023 balance sheet and the end of year data, you copy and paste value in the beginning of the tax year. And pretty much your balance sheet, if you have a accounting software that you are using, it should be able to be updating your balance sheet for you as you do your bookkeeping. So your balance sheet, you have cash asset, a cash in the asset section. You have your inventory section as well, and you have your amortization section, and then your liability section. You have your account payable, and your account payable could be maybe your credit card balance at the end of the year. It could be your payroll, if you have payroll taxes that you didn't send on time, is still, the amount is still in your bank account, depending on whether you use cash or accrue. You might have some numbers there to put as well. You have your capital contribution, and the return earning is just going to be your profit or loss from your business. So you have the beginning of the year, you have end of the year, and your assets and your liability, they should zero out. And the way I like to do it, a simple way, is if there is a discrepancy between the two, and knowing that you enter everything in the row they're supposed to, the difference will go in the return earning, because you want to have your liability and your asset to match. So in this example, the asset is 10,171. Let's see if we can memorize that. 10,171. So we can go back to it again, and we can quickly so your cash is going to be your bank account at the end of the year, December 31st. So that means at the end of the year, it's good you pull your bank statement and save it. And but if they send you bank statement, you should be able to find that as well. Even if you didn't do that, you should be able to, when you go to your statement December 31st, you should be able to see on that line the remaining balance. But it's good to pull that December 31st to have that in file, and that will go there at the end of the year, after you copy your end of the year into the beginning of the year, because your end of the year, December 31st, become January 1st, beginning of the next year data. So December 31st, 2023 become January 1st, 2024 data. That's why you'll copy and paste at the beginning of 2024, you'll copy end of 2023 to paste at the beginning of 2024. And then 2024, you will pull your December 31st, 2024 account, cash account, you put it. If people owe you money that they have not paid you yet, then you'll be adding that as well. But if you do not have that business model, then you don't really worried about that. And then you'll have inventory. So for inventory, you have you'll use your inventory document, inventory and sell spreadsheet if you are using a spreadsheet or whatever document you are using, and we can quickly go look for inventory here. And you'll have inventory pretty much beginning of the year, purchases during the year, and year-end inventory. So 8310. If you go back, 8310, you'll have that. So, and then you'll have your assets. So if you have business assets, you will add those as well. You'll update it. So pretty much the way that works is asset, the value of asset that you purchase for your business throughout the years, how much you depreciate there. So far, you'll be entering those, and pretty much at the end of the year, you'll be changing. If you purchase an asset, a new asset during 2024, it will go in that section. And then depreciation you are going to take during the 2024 will go down there. So if we pull our depreciation summary, depreciation to claim in 2024, depreciation of the year, because there is no asset purchase in 2024, we don't have anything on that row, but it's good to track your depreciation throughout the year. And 724, if we go back to the balance sheet, 724, you add it there as well, and that cell is just tracking what you depreciated so far, and the difference between the two will tell you how much you have left to depreciate. For amortization, if you're amortizing things, your amortizable assets total will be on that row, and if you purchase an amortizable asset during the year, it will go on that row as well at the end of the year row, and amortization amount you are going to take that year will go on that row. So when we can go back to, let's see here, amortization. Let's open this. And you can just copy your amortization amount and put it there as well. And it's good you track your assets, that you can, if you are depreciating assets, you track them and your depreciation throughout the years to take. So, and you add that as well, and that's how you determine your total assets to put on Form 11 or 20S. And now if you want to draft your own balance sheet, you wanted to make sure your liability match that, because your assets, you either use your cash or you use your credit card to buy your assets. Therefore, you want to put, if you have a balance on your credit cards, it will go there. If, because you have cash up there, if you have payroll that you like, your tasks, your payroll tasks that were supposed to be deposited in your payroll tax account with IRS and you have not done it yet, it's still in your cash that you put up there, it might be a good idea you put it under account payable as well, what is due that you still have in your cash. That way it can balance out, because you have the amount in the cash section but it's due somewhere, so you can put it there. That way it does not look like it's more cash you have on hand than you actually have, since it is you owe money somewhere that you have not paid yet. And the same thing as credit card as well. If you purchase things with credit cards and you have them, whether it is in your inventory or in your assets, long-term asset depreciation area, might make sense to put how much you have remaining on your credit cards in the account payable section as well, so that you can balance it out. If you put your own money in your business capital contribution, you will add it there as well. And then the difference between your assets and your liability, you will add it in the return earning, so that you can balance both. But again, depend on how much you are making. I believe too, if you are generating a revenue of less than $250,000 a year, you may not be required to complete Schedule L on Form 1120S. But regardless, it's good you start learning how to, create your own balance sheet, which is also called Schedule L, so that when you are required to provide that information, you have it. Regardless whether you are drafting your balance sheet or not, you still need your asset to be put it on it. Therefore, having the balance sheet might be useful to help you determine your total business assets. So line G is the corporation electing to be an S corp beginning of this tax year. So you answer that question to the best ability of your knowledge. In this example, I'm just going to put no. H. So you check anyone that is appropriate. If not, you just leave it alone. I. Enter the number of shareholders who were shareholder during any part of the year. So you'll put the numbers here. In this example, I'm just going to put 2. So, and if that's just you, you put 1. If that's you and your spouse, you put 2. If how many people is in own share of your business, you put that number there. So J, check if the corporation is one aggregate activity for section 465 at risk, purpose, or group activities. I'm going to leave it just like that. So 1, gross receipts. I think this might be a little bit small. I don't know if you are able to see it. Let's make it a little bit bigger. So gross receipt or sale. So your total revenue, if you are selling things, will go on line 1. So page 1 is related to business activities. Business activities, not passive income. Passive income will go on Schedule Schedule K. So if we go down, you have Schedule K, that dividends will go, royalties will go on, rental income or loss will go on Form 8825, and then the profit or loss from there will come on Schedule K. You complete page 1 if you have business activities, like active activities, like for instance, for our business, we sow to sell, and then we have service. So when you are using your time for money, your revenue is going to go on in page 1. So it's active. You are active in the business. So if you are providing services and you are getting paid for your service, it will go on page 1. If you are making things to sell, it will go on page 1. So the revenue and the expenses. So because we sold to sell, we have those, we are going to use page 1 to complete it. So if you have inventories, yeah, you will need your cost of goods sold as well. So line 1, so let's open this and have it down. So line 1, gross receipt or sale. In this example, we are going to pull our inventory and sell spreadsheets. Because we carry inventory, we are tracking our sales there. Therefore, we will put the gross revenue, and the sales is 3714 in this example. So 3714. So we'll put 3714. We are rounding. So if you have returns, you'll put it there, and the difference between the two will go here. So in this, I'm just going to put 3714. Cost of goods sold. So now on costs associated with this revenue, if it's related to inventories, it will go on form 1125A. Therefore, we can just go back to IRS website and pull form 1125A, and knowing those different documents that your numbers will go on, if you try to draft it yourself, it will allow you to understand the tax you are filing. And when you are using okay, I hope we downloaded though. When you are using the tax documents to the tax software to file your return, and the tax software usually will ask you a question, you give an answer, and it will put that answer, that number that you gave as answer, in the right form on the right line for you. But knowing what to expect, it will help you understand. It will help you close the door completely. It will help you understand what you are doing more. It will help you answer the question. So now we have cost of goods sold. To be able to put cost of goods sold on line 2, we'll need to complete form 1125A. So 1125A, again, the software will put your name, your business name, and your business identification number. Your software will complete the form for you if you need it. But it will ask you questions about your inventory at the beginning of the year, especially if you didn't use that software the previous year. But inventory at the beginning of the year will be the prior year and year inventory. So if we go back to our inventory spreadsheet, is going to be 7970. So you'll put 7970. In fact, I think I'm just going to put the full number. So 797043. You can round it, you can put the full number. Your software will do what it thinks is right to do. So purchases during the year will go on line 2, and your purchases during the year is going to be your, if you take things out of inventory to make things, it's going to be your out of inventory, your purchases, and product that you put back in inventory as well after you make things, the value of those. So your purchases during the year is going to be, in this example, 2365.27. So we can check that to see 23, 65, 27. And then cost of labor, if you have labor directly associated with this, you'll put it here. That means you are not going to put it on form 1120S where you have labor if you put it on this form. Additional session, other costs, and total is going to be to total line 1 all the way to 5. And we can use a calculator for that. 7970.43 plus 2365.27, and we have 10335. 10335 70. Okay, so inventory at the end of the year, you go back to your inventory spreadsheet again. So that's, total that we just calculated. So inventory at the end of the year, we have 8310.44. 8310.44, and that will allow you to calculate the cost of goods sold, the cost associated with product that you sold during the year, and it's going to be to take line 6 minus line 7, so minus 83,110.44, and it's going to be 2025.26, 2025.26, and we can double check that number, 2025.26. And cost of goods sold is going to go on your form 1120S 2025 rounded, and you will attach form, the software will know that form 1125A that it completed for you will be attached to it to show where that number came from. So gross profit will be to take line 1 minus line 2. So 3714 minus 2025 is giving you 1689. Net gain, so if you have anything that will go on form 4797 part 2 or line 17, you can read the instruction related to line 4 to see if you have anything that is related to it. But usually if you are doing a recapture, it could be associated with it as well, that it will go back in it as income, if there is a gain or loss related to whatever activity this form is related to, it'll go there. That's why you have the instruction. So when you go to that instruction, line 4, it will give you information on it. So your software will ask you questions to see if you have any information that will go there, and your answer to those questions will determine whether that form needs to be completed or not. So in this instance, we are just going to leave it alone. And then you have other income or loss. Attached statement will go on line 5, and then you have your total. So the total is going to be to total line 3 all the way to line 5 and add it there, and here is going to be 1689. So that is the total income. So now you are going to put your cost. Now that you have the top portion is the income portion now, but within that, when you have physical products, it will allow you to deduct the cost of those products that you sold out of it, as if you are carrying inventory, because when you are carrying inventory, you do not deduct the cost of all the products that you purchased during the year, but only the cost associated with the product that you sold out of it. Like if you use those products to make something, the portion that you sold of those finished good, cost associated, cost related to making them, that is what you include on line 2 to deduct your gross income from it to find the total income. So compensation of officers. So you, the owner of the business of the S corp, you are and you are an employee of the business. You are working in the business. Depending on the income level, though, you might need to complete form 1125E. But in this instance, we don't need it. But if you need it, based on how you answer the software questions, it will pull numbers to that form or may not. So here we are going to put the numbers straight here. And so that means we are going to go to our bookkeeping documents, and on that, and again, it's good you track your payroll, everything properly, so that you can find the information you are looking for. So it is for that compensation and wages section of the expenses that you need your payroll record. So 217 is what we are going to put down for the officers. 217. So salary and wages. So if you have employees that are not officers, their salaries will go on line A. For any partner of the business that is working in the business, they are officers, so they will go on line 7. And if you hire people to work in the business that don't owe share of the business, they will go, their salary and wages will go on line 8. So line 9, repair and maintenance. And as owners of the business, chances are you will be occupying the officer's position, like the CEO, the CFO, the COO. But if you, the partners, are now working in the business and you hire people to occupy those positions, then their salary will go on line 7. But by default, for a small business, you, the owners, will be the one working in the business and therefore occupying those top positions of the business. And if you hire people to work for you, their wages will be on line A, and you, the owners, salaries will be on line 7. If you have a repair or maintenance cost, it will go on line 9. Otherwise, you leave it alone. Bad debts, rents. If you are renting a place outside of your house for your business, you are paying rent, it will go on rent. If you are working from home, though, I don't think it is a good idea to put it on line 11 if you are paying rent to yourself. But you can choose to do that, but it is more like a reimbursed account under accountable account, and it might be a better option to put it under other deduction and have those have it in an attachment to add it to it, and the software will give you the option to list those different deduction under other deductions. But if you are paying yourself to occupy a portion of your house, it will go under other deduction if you are doing it like a reimbursed account. But again, you have 11 for rents. So tax and licenses. So tax and licenses, what I like to put here is more of your payroll tax that you pay during the year. It will be unemployment tax and payroll tax. And in this instance, let's see here, it is 1787. And let's see, if we scroll all the way down, in fact, if we scroll down, you see 1787 for your unemployment tax and employer payroll tax. And because again the employee portion of the payroll tax, social security and Medicare is included in the payroll section here and deducted under line 7. By doing that, then you only need to deduct employer portion of the Medicare and social security. If you take home pay on the payroll section, then on the tax section, then you'll put the employee and the employer section of payroll tax, social security and Medicare. I don't know if it makes sense, but because both of them are paid to IRS within that year, I made that distinction by having that is the right way to do it, to have the gross payroll under the wages and the compensation area, and have the employer portion of a payroll tax and unemployment tax under taxes and licenses. You do not put state sales tax on it. State sales tax should never be included in your gross revenue. If you have your own website and you sell on your own website and you collect state tax for your state, you do not include that in your gross revenue, and you do not include that in your taxes either. You are collecting it for your state and to send it to your state, so it stay outside of your gross revenue and it stay outside of your taxes as well. That is how I like to do it. But again, it is your business. You can do it the way you think is right. Just make sure you don't deduct an expenses twice. So let's go check it again, and I think it is 18 when it's rounded. So 18. Interest. So if you have interest, expenses will go there. Depreciation. So when you have assets, depreciable assets, you purchase them. A lot of times software that you are using to file will want it to help you get the most deduction. Therefore, they will complete if you are eligible for it, which chances are you will be, they will complete form 4562 and put the expense under and claim section 179 deduction for you, and that section 179 deduction allow you to claim your asset expenses in full in the year you purchase it. So depend on, especially if you are using 100% in your business, it will try to use that section 179, and in that case nothing will go on line 14 if you claim the full amount. If you prefer to depreciate your assets by claiming a little bit every year to spread out the cost, then line 14 will be completed. And if you purchase a new asset in 2024, you place a new asset in service, then you'll be required to complete form 4562, and the software should be able to do that for you. And one thing is good as well is if you find a software that is good for you, you might just keep using that every year, because once you create an account with them, if you are depreciating asset, it will have the asset. I will assume so. It will have the assets in their record. That way, it will just know, for the new year, how much of that asset depreciation amount you can deduct for that year, just like the way I showed you a spreadsheet earlier. But so having depreciation. And if you didn't purchase a new asset in 2024 and place it in service in 2024, then you may not need to complete form 4562. You can put the depreciation amount straight on line 14. At least that's what we are going to do here, since that's a draft. But again, the software will know if Form 4562 need to be attached or not. So we are going to go to our depreciation worksheet, and 724 is what we are going to take out of here. 724, and that 724 is just going to, let's see, is going to be, to go through your history and to see what you are depreciating. If you are not done depreciating them. So like for instance, assets placed in service in 2019 are done depreciating, so nothing from there. But 2020, there is an amount there to take. 2021, there is an amount there to take for 2024. 2022, there is an amount there to take for 2024. Asset purchase in 2023, there is an amount there to take for 2024 as well, and you collect all of those. Now the amortization, you collect all your depreciable amount, and if done right, it should total to that amount we have there, and that amount will go under depreciation. So while we add it, if you have amortizable amount, it'll go under other deduction. So that's something, if you have amortizable amount, you do not forget about it, because it will go on the form but elsewhere. So advertising, so if you have advertisement expenses, you'll add it on line 15, and pretty much line 17, 18, 19, we are going to leave those line blank. But if any of those is related to your business, you read more about it and you complete it. So line 20, other deductions. So other deductions are just those deductions that you didn't find any specific line here to put it on it. So, and they will say to add an attachment. So we are going to go back to Schedule L, and Schedule L, the attachment, the draft attachment, we have it down, and it's just going to be again your bookkeeping and things that you didn't have a specific line for, that you will add it to it, and is 1502. Let's go back to the bookkeeping here. It's 1502, and it is going to be storing those expenses. Let's go down. That is the total and the amortization. So 1502. So we'll go down there, and 1502. So when you add 1502, you'll want it to add an attachment that is showing what that 1502 is, and that's where the breakdown is to total 1502. But again, because we chose not to group activities, if you go back up a little bit, we chose not to group activities. Therefore, it is a good idea. I don't know if the software will give you the opportunity to break your activities down, but yeah, it's good, if you have, let's say you have retail and service business together, it's good to know expenses that are related to one activity and expenses that are related to the other activities. So in this instance, we purchase a tax software to file taxes. Therefore, it's a service-based expense. Therefore, it's going to be there, and the purpose of doing this is to be able to spread the expenses and the revenue to the partner based on their share ownership of the business. And when they are filing their 1040, if they didn't materially participate in the business, they may not be able to claim a loss against some passive loss against their active W2 revenue, wages. So for those partners that isn't really working the business. So if your business is profitable, there is no problem. But if your business is has a loss, they may not be able to claim that loss against their job payroll that is on their W2 income pretty much. So they will carry over to the next following year. So that I think that's the reason behind separating those activities, so that you can separate the revenues as well between them. Okay, so and now let's go back again. But so now we have our 1502. So now and oh, hold on, there is something that I didn't point out when I went to that, is the amortization. So let's go down so that you can see the components. So mail, like shipping things, and office supply use, not office supply purchase, but also office supply use. So and packaging supply use. If you have organizational costs that you didn't deduct it in full the first year that you went in business, any leftovers that are amortizable will go in the amortization section. But I think even organizational costs and startup costs for the first year that you are allowed to deduct the full amount, I think up to a certain amount, it will go on line 20 as well. So I pretty much have a space for it. So if you have online store, chances are you are paying for hosting fee, you are paying to renew your domain name on an annual basis. If you have renewed, you are paying for multiple years, you can only deduct for 1 year though. So again, so for I like to pay 1 year fee for those, so that it just make it simple for me to deduct that 1 year expense. So you have that. If you have a PO box as a physical product seller, we have a PO box, so we have that as well. And web fees, so we have those, and shipping orders, and then employee reimbursement. So if you reimburse for mileage, you reimburse for travel, you reimburse for home office, I have space for those. Utilities, so if you are using your home, yeah, a portion of those, if you can segregate it, you can put it as well. It can just go in the home office, or it can go separately as well. Or if you are renting a place and you are paying for utilities, it will go there as well. But amortization is the reason why we came back here. So amortizations will go there as well, and the total to that 1502 that we put. So an attachment will be added when line 20 is filled. So total deduction is going to take line 7 all the way to line 20, and let's get to it. So 217 plus 18 plus 724 plus 1502 is 2461. 2461. So let's check that number to see if that's what we are having on our balance sheets. Let's go up a little bit and go to down here and go down. Okay, 2461. So 2461 is that. So ordinary business income or loss. So it's going to take line 6 minus line 21. So let's go back and do 1689 minus 2461. We have negative 772. So is the reason why you are using a draft form to put your numbers in, to have an idea what to expect. And then when you use the software to complete it, you want it, your goal is what the software end up having is going to be about the same as your draft you have on your drive. That way you know that you complete your form well. When there is a difference between the two, it's good to know where the difference is to see, if it's still okay. But at least, by putting your number at different spot on the form allows you to know the different things that you should be expecting the software to be asking you as question to pull those data from you, so that you do not forget, an expense to deduct. So line 23, this task session, I'm not going to say much about it because it may not be applied to everyone, but again, because it's an S-corp, your profit and your loss flows to Schedule K, Schedule K1s, and distributed to partners to report on their 1040. Therefore, your S-corp usually does not pay taxes. And that is if, depending on the activity you are doing as well. So, as an S-corp, you shouldn't have passive income like dividend income to be more than your active income. It might void your S-corp, depend on what it is, but it could generate some taxes as well. And another thing is how you are pulling inventory out to sell as well. So let's see here. If you are completing this, is going to be cost. If you are using last in first out, you will be checking that box, and then you'll be providing document. And because by default it's first in first out of your inventory. So if you are completing this, so you just check answers. Is there any changes in determining that? No. So if property is produced and accrued for resale due, the rule does apply. So you just put no there. But again, they have instruction at the bottom of the form 1125, a cost of goods sold, for you to read and understand it, and you just check things. So check if LIFO inventory method was adopted. So we are not going to check that, but again, if you are using LIFO, you might have some recapture taxes, but we are going to just leave that section blank and we will just continue. So, and again, you are going to use software, but may I discuss this as return with the preparer? You can just check no. You can discuss that with the owner. And then you have Schedule B. So Schedule B is going to be for you to check whether you are using accrual or cash, and then your business activity and the product services that you provide. You'll put those, and then you just read those questions and you answer yes or no. So we are not going to dwell much on that. So the first is, was any shareholder of the corporation be a disregarded entity? Will say no. Does your business own 20% or more directly or indirectly of another business? We are just going to say no. Own directly 20% or directly or indirectly of a partnership, we'll say no. But if yours does, you check yes and you complete those things. So make sure you read the question well and you answer. At the end of the year, does the task did the corporation have any of the outstanding share of restricted stock? We will say no. Okay, so, and at the end of the year, did the corporation have an outstanding stock of similar instruction? So we will say no. Has the corporation filed or is required to file Form 8918? No. Let's continue here. 8. If the corporation was a C Corp before it led to be an S Corp, and the answer is no. Did the corporation have an election under Section 163 for any real property, trade or business, farming? No. Does the corporation satisfy one or more of the following? The corporation own a pass-through entity with current or prior year carryover. The corporation aggregate average annual gross receipts for the 3 tax year are more than 3 million. C. The corporation is a tax shelter. The answer is no. So they say any one or more. Again, it's based on this example we are using. But if you met any one of those requirements, your answer will be different. Does the corporation satisfy both of the following? The corporation total receipts for the tax year were less than $250,000. The corporation's total asset at the end of the year were less than $250,000. The answer is yes. It's very important. If yes, the corporation is now required to complete Schedule L, which is the balance sheet, and Schedule M1, which is like profit and income loss. So that is M, and that is pretty much the balance sheet, a simplified version that we use is Schedule L. So pretty much the balance sheet. Okay, so we are going to go back up to where we are answering those questions. Okay, and then during the tax year, did the corporation have any non-shareholder debt that was cancelled? No. During the tax year, was a qualified sub chapter election terminated or revoked? No. So did the corporation make any payment that would require to file 1099? No. But again, those are what will be expected from you. If yes, then did the corporation file it on time or will file it on time? So you can just, I don't know if that will be confusing. I'm just going to leave a blank there because they say if yes. Is the corporation attaching Form 8996? No. At any time during the year, did the corporation receive an award or payment for property or service, sell, exchange, otherwise dispose of digital assets? No. Again, you'll answer those questions based on your business model and your business activities. And now we are on Schedule K. So how do you complete Schedule K? Form 1120S. So you'll have line 1, which is your profit or loss from page 1. And I believe is negative 772. Is here. So if you are using the software, once you have that number there, which the software will calculate for you, the software will automatically put it on Schedule K and will divide it between the owners as well, based on their share ownership percentage. So here we are going to have negative 772. Pretty much Schedule K is the 100%, and Schedule K1 is a fraction that needs to go to every owner of the business. So if you have 2 people in the business and they are 50-50, whatever you have on your Schedule K will be divided in 2 equally between them. So if you have 10% and 90%, 2 partners, one is 10% owner and the other one is 90% owner, the Schedule K1 will be using Schedule K times 10% for one partner, and Schedule K times 90% for the other partner. So Schedule K is just 100% for the business, and Schedule K1 is a fraction of Schedule K that goes to that partner based on that partner's ownership percentage. So net rental income or loss, it will go on Form the A25, like rental properties and income and expenses, and the profit or loss from there will come to line 2. We are not going to do that in this. We are not going to go through that in this form. And then you have line 3. Other gross rental income will go there, and expenses from rental activities, other rental activities will go there as well. So pretty much this is more rental income that is now real estate. So if you rent some other things that are not real estate, expenses and income related to it will go on line 3. And then interest income will go on line 4. Original dividend will go on line 5A. Qualified dividend will go on 5B. And royalties, you have royalty income, it will go on line 6. So, and pretty much any other income that you think your business is generating that you didn't put on page 1 will go on what you think is appropriate for it. And then you have deductions. So section 179, if the software completes section 179 to expense your assets in cost in full in the year you purchase it, it'll go on line 11 of Schedule K. It's not going to go on page 1. It'll go on line 11 Schedule K and will be distributed between the partners. I don't use section 179 because it'll go on Schedule K. It's not decreasing the business income, but it's going to go on partners, and the partners can claim that on their 1040. So I just prefer to just depreciate slowly so that I can claim the depreciation deduction right on page 1 of the form, to decrease the business income by the portion of that depreciation amount of the year. Is slowly depreciating the assets, but is decreasing the business profit that will flow to Schedule K. So, but if the software expense the assets in full, that's where the amount will go. It won't go on page 1, it'll go on Schedule K, line 11. Charitable contribution will go on line 12, and everything included. So expenses related to investment will go on line 12C, and other deduction will go there, and income related to expense related to royalties will have a SPA there as well for it. So if you have royalty income, you'll have royalty expenses that will be somewhere around this area, and probably on the other deduction could be 1 as well. But again, when you read the instructions, you'll know what area of their royalty expense related to royalty income will go. So line 13, I'm not going to spend too much time on that. Line 14 is Schedule K2 for international businesses, and line 15 is depreciation adjustments. I'm not going to do anything there. You have line 16, tax exempt interest income, other tax non-deductible. So if you have non-deductible expense, it should not have gone on any area until now. It'll go on line 16C. And distribution, if you make distribution to partners, it'll go on 16D. And foreign tax paid or accrued will go on 16F. And then we will continue. Line 17A, interest investment income. You can read the instruction to see what kind of investment is related here, and investment expenses will go there. Dividend distribution from paid from accumulated earning and profit will go on 17C. In fact, this area is dividend distribution and this is distribution, so it's good to item affecting shareholder basis. So it's good to, if you make distribution to partners of, you distributed some profit from the business to your partners, it's good to read between 16D and 17C to see the difference between the two, which portion of the distribution should go on which row. And 18 is income loss reconciliation. So you will combine line 1 through 10 of schedule K. So line 1 through 10, line 1 through 10, and then you will subtract line 11 through 12 and 16F. Line 11 through 12, line 11 and through 12 and 16F. 16F. And when you do that, we didn't have any number on those, so that means our number on line 18 is going to be negative 772, just like our line 1. Okay, so and that's how you complete your form 1120S page 1, schedule B and schedule K. So now we don't need schedule L, we don't need schedule M1, but we have schedule M2. And I'm not very good at completing schedule M2. You can read the instruction on it, but for the balance at the beginning of the year is going to be the prior year end year balance. So I'm going to go here and have my draft schedule M2 and CC 115. So it is the previous year end year number, so C61. And then so ordinary income from page 1 line 22, we don't have income, we have a loss, so we are not going to put anything. Other addition, if you have other addition, you'll add a loss from page 1 line 22. That's where we'll put our loss is 772, because you already have that minus parenthesis there already. And then other reduction, we don't have any. Combine line 1 through 5. First, let's go back and see if that's negative or if that's plus. So that's a plus number there. So when we can use our calculator here, we can do plus C61 is giving us negative 11, 11, 11. So we are having negative 11 there. Distribution, so if you make distribution to the partners, you'll go there, and the balance will be to take line 6 minus line 7 to see what remains there. We have negative 11 there. So the following year, that number will go on top there at the beginning. So shareholder undistributed taxable income previously taxed, and based on here we have 2728. 27, 28. So let's see here. The brown just means you don't put anything there. So if you combine line 1 through 5, we are having 27, 28. And then distribution, there is any there, we'll go there, and the balance is going to be 27, 28. And I think that is so that is just those two that I think we should be completing based on the business model. But again, you can read the instructions to see if you need to complete the C and the D portion, and it just allows you to track the accumulated a profit that is not distributed to the partners over the years. So now that we completed Form 1120S, we will complete Schedule K1. So I think I'm going to end this video and quickly we can draft Schedule K1 as well, so that we don't make this video too long. But just know that once you complete the form, the tax software will pull the numbers to Schedule K1 once you start entering the ownership that those partners have. Thank you so much for watching. We thank you very much for your time, and we thank you very much you all that subscribe to our channel. Thank you very much for all your comments. I'm Afiavi Liberman, creator of Liberman Consulting L.L.C YouTube channel and ninasoap.com, our blog. On our channel and on our blog, we share different ways to save money and different ways to make money to reach your financial independence, where you do not depend on an employer to provide for your family. And filing your own business tax return is one way to keep your business expenses low. Again, use a tax software to file it. It will save you time, and it will, wherever the same number needs to go on multiple forms, it will file those forms automatically for you once you enter your numbers once, and it will file the state return for you as well. We'll just need to double check everything and sign and submit. Thank you.